Three things which affect predictions in stocks, forex, or indices. Which are these three things? These are lagging, leading, and projections. These things, they are the ones which affect our predictions, which affects the direction, or which give us the bias of where to buy and to sell. In the trading world, we have the facts and the rumor. The facts, they fall in the category of technique analysis, and the rumor, they fall in the category of fundamental and sentimental. The rumor has it that, I'm just giving an example. The rumor has it that 70% of retail traders, they are buying GBP USD, and 30% they are selling it. And this thing, it is likely to go down, because in a small number is selling, then the bigger number, which is the 95% they are buying, it is a rumor. Another rumor is Joe Biden has pumped in 3 billion US dollars in the US economy. Then we go and look at GBP USD on the graph. We are expecting the dollar to gain, but on the other side of the fact, we find GBP USD has broken the strongest resistance of the past 7 weeks or 7 months. It has broken the high, and it has even done a retest. So we are expecting GBP USD to go higher. There are two things, the facts and the rumor. The fact, there are things which you are able to see on the graph, and they are happening. Then the rumor, these are words which you cannot see, but you can hear them. So here, for the three things which affects the predictions, we are only going to deal with the fact. We are going to start with the lagging. What are a lag? A lagging indicator, it gives a signal after a trend has started. An example of a lagging indicator, a moving average crossover. If you are using a strategy which has crossovers or a period inside, that tool which you are using, it is a lag. You are going to be missing out some pips. A leading is an indicator or an oscillator. It gives a signal before a new trend or a reversal occur. An example of a leading indicator is the RSI. An RSI, it is going to warn you in advance to say this trend which is going down, very soon it is going to start to trend up. That is a leading indicator. Then what are projections? Projections are tools which focus, point in advance where the next price bounce off or reversal will occur in the future. An example of projections or tools which project in the future, these are trend lines, channels, support and resistance, supply and demand, pitchforks, and all Fibonacci tools. An example of Fibonacci tool is a Fibonacci spring. So these are the three things which affect our predictions as facts. Let's go to our MetaTrader. We check an example of those three things which we have mentioned. Here I have two periods of moving averages. This is period 100, and on top here I have period 50. A person who is using a lagging indicator, when it crosses, that's when it gives him a signal of a trend reversal. So here is where he or she is going to enter are these candles. Where the reversal occur is not going to be there. So there are advantages and disadvantages of these two. If you are using a lagging indicator, you're going to be missing out. That is the first thing. The other thing is that if you wish to catch the reversal or the turning point like here, you are not going to do it because the tool which you are using is lagging. It's behind. In short, it's behind. It gives you a signal very late. That's when you're going to enter. So you're going to be missing out some pips. Let's go to another example. Is a leading indicator. I have the RSI here with me. Let's assume that price is here on the vertical line here. What a leading indicator, it's going to tell you, it's going to compare two highs and lows. For example, we are comparing this high here with price here and the other high here. So you're going to find that the RSI and what is going on with price, the RSI is saying a lower low while price is making a higher high. So a leading indicator like the RSI is going to warn you to say this trend is going to reverse because of the divergence. Then the other two, which are projections, is an example which I have here of a channel. Point number 1 and 2 was connected, and then another 1 and 2 on the low was connected. So for a person who is using projections, we are going to assume that before these things happen, he had these points which I've labeled 1, 2 above and 1, 2 below. For him to have a signal generated, this sloping trend line is going to project in the future before everything happens. As price touches the trend line, is going to generate a signal and is going to be able to enter a buy. So these tools are the three things which affect us traders as we are trading. So there are advantages and disadvantages of these three tools which we have in the forex market. Either you're trading stocks, indices, or currencies, these three, they are going to affect our prediction. So this was just a hiccup summary for those who are unaware about these three things. Some of us, we know them because we've been in the forex market or in the stock market or synthetic market for a long time. We know how some of these things operate. So this was just a brief video or a brief education purpose about the three things which affect our predictions. So I've showed you the advantages and some disadvantages of these tools. So thank you for watching.